What's up, guys? My name is Pete, and I'd like to welcome you to another edition of Phipps Tips. In today's episode, we're going to take a look at the overall market. We're going to check out the top performers. We'll have a look at today's biggest winners and its biggest losers. We got a couple of news articles this afternoon for you. The German government cashes in on a big Bitcoin seize, and the halvening coming in 2020, what that means for Bitcoin price. We'll find out. And then we're going to wrap it all up with a little bit of technical analysis on the king that is Bitcoin. All that and more coming up. Stay tuned. Happy Tuesday, guys. Hope everybody's having a good start of their week. Those of you who celebrate Memorial Day, had the day off yesterday, back on the grind today. And today, the market looking a little bit green. I'm liking the side of it. We've got on CoinMarketCap, the market cap coming in at $328.8 billion with a 24-hour trading volume of $19 billion and Bitcoin dominance checking in at 38.9%. Of our top five today, we got Bitcoin up 3.5%, Ethereum up 7.72%, Ripple up 5.5%, Bitcoin Cash up nearly 7%, and EOS up nearly 2% on the day, guys. What we've got going on versus Bitcoin today, we have Dropple up 25.87% against Bitcoin, Nexus up 17, nearly 18% against Bitcoin. Cybermiles up 17.16%. GX Chain up 15.5%. And 0x up 15% against Bitcoin today. Our gainers and losers for the day, guys, we have Vesti up 195.5%. Or 195.5%. I'm sorry, guys. With just a 24-hour trading volume of $58,000, something I'd want to skip past if I were you. Latium X up nearly 40% with $2 million in trade volume, something I would be looking into. Whalecoin up 71.3%, Silent Notary up 70%, and Chronobank up 66.02%. Today's biggest losers, guys. Future X down 68.68%, Plancoin down nearly 40%, Docademic down 26.72%, Sumo Coin down nearly 20%, and Dragon Coins down 19.5%. I'm definitely going to be looking into this Latium, guys, and Silent Notary. Both of these seem pretty cool. I want to check them out later. We're going to move on into our news articles of the day, guys. Stick around. German government cashes in on seized crypto worth a whopping $14 million. The German federal state of Bavaria has struck gold. Bitcoin gold, that is. Not to mention Bitcoin Cash, plain old Bitcoin, and Ethereum. In a landmark sale of seized assets, prosecutors earned the government almost $14 million, or 12 million euro, selling cryptocurrency that had been recovered from a company operating illegally. The loot included 1,312 bitcoins, almost 1,400 Bitcoin Cash, 1,312 Bitcoin Gold, and 220 Ethereum. The seizure was the result of a criminal proceedings against an online audiobook company known as Lesen und Loschen, or in English, Read and Listen. The company ran a platform selling ebooks illegally for only a few cents per book and featured over 200,000 titles in its inventory. It's believed up to 30,000 people used the site. Arrests were made last June by Bayern Central Cybercrime Office. The story was reported by German newspaper Der Tagesspiegel. The sale, while significant, pales in comparison to the $3.3 billion that Bulgaria made last year from Bitcoin seized in an organized crime bust. With the profits, they managed to pay off 1/5 of their national debt. Good thing nobody told them to hodl. The amount would be worth half of that today. In another similar case in January this year, the U.S. government pocketed $40 million in proceeds made from the sale of a 2170 Bitcoin recovered by U.S. Marshals. At the time of this writing, Bitcoin is at $7,400, but is almost certainly going to the moon soon. So try not to get busted. So what do you think, guys? I mean, for all the touting that governments are saying that, you know, crypto's a bad investment and it's a bad idea to sink your money into it, sure seems like when they're cracking down and, you know, seizing all this cryptocurrency, they have no problem cashing it in themselves. So, you know, guys, you got to take with the good with the bad when it comes to crypto. You're going to hear a lot of fear, a lot of uncertainty, a lot of doubt, a lot of, you know, downing Bitcoin. And then those same people are loading up on the stuff. Mark my words, guys. Mark my words. As the markets capitulate and, you know, there's a frantic sell-off, Warren Buffett says the best: buy when there is blood in the streets. And what that means, guys, is it doesn't literally mean to go out and kill somebody or anything like that, but when the news is at its worst, when you're hearing the worst things that you could possibly hear about Bitcoin and cryptocurrency, you know, the price is tanking and it's going under, you know, the market cap's going to go to zero. That's when you buy in. That's when you buy in. The price is low and it never fails, guys. It never fails. Fear, uncertainty, and doubt, or FUD, always blows over. Always. And there's always money to be made once that happens. Believe me, guys, I've been part of it. I know. Like, personally, just personally, I was in a coin called Encash. It was a company by Nucleus Vision, called Nucleus Vision. That is the cryptocurrency that they've put out. It's called Encash. There was a bit of misunderstanding with them, and their price tanked by half the price. I scooped up on it during the down, and then it was maybe 2 days later, the price went right back to its original sale price, and I doubled my money on it. And, you know, everybody was saying, oh, it's going under, the company's done for. 2 days later, they were right back to the market cap that they were. And, you know, I had twice the amount of money. So there you go. Just something to keep in mind, guys. You cannot believe everything that you hear about cryptocurrency. Do your own research. I'm going to tell you that until you're sick of hearing it, and then I want to continue telling you that. Do your own research. Know what you're getting into before you get into it. That way, you know, you don't have anything to be afraid of when you hear crazy things like this. You know, just trying to keep you informed, guys. Just trying to keep you informed. Moving on. A Bitcoin halvening is 2 years away. Here's what will happen to the Bitcoin price. In around 2 years' time, on May 27th, year 2020, unless wild swings in the mining hash rate change anything, the coin reward for mining new Bitcoin blocks will drop from 12.5 Bitcoin to 6.25 Bitcoin. And people are already thinking about what this could do to the Bitcoin price. Much has changed for Bitcoin, cryptocurrency, and blockchain since the last Bitcoin halvening, something the community calls a halvening, which happened July 9th of 2016, and each time it happens, no one is entirely sure how the Bitcoin price or the economy that has been built up around it will react. A Bitcoin halvening, there have been 2 since Bitcoin's creation in 2009, is a fixed event and will occur after every 210,000 blocks are mined or confirmed by the system. Some 12 months after the first Bitcoin halving event in November of 2012, the Bitcoin price reached what was then an all-time high of $1,000. The 26th halving heralded last year's bull run, which peaked in December of 2017 at a Bitcoin price at an eye-watering $19,000. Since then, it's fallen sharply back, but the same happened after the 2012 halving and subsequent boom, with the Bitcoin price falling as low as $200 per coin before picking up in the lead up to the 2016 halving. While the Bitcoin price has climbed somewhat ahead of both subsequent halving events, the price has gone on to boom in the subsequent 12 months or so. Many Bitcoin and financial experts think this is similar to a traditional market price in changes to interest rates or changes to commodity supply. Previous halvings have shown negligible impact on Bitcoin's price. This is because, rather like a much anticipated interest rate cut, everybody already knows what's going to happen way in advance, says Glenn Goodman, Bitcoin analyst and author of forthcoming book, The Crypto Trader. If the market knows the supply is due to be reduced at a certain time and by what it will be reduced by, it will begin applying the reduction to the price gradually, avoiding sharp spikes and dips. Historically, the cut has had very little immediate impact, although the price usually rose after, said Chris Wollmer, professor at the University of Pittsburgh and co-author of Bitcoin for the Befuddled. The rise in price makes sense insofar as large buyers of Bitcoin have to either buy on the market or get them through mining, and after a halving event, it forces more people to buy on the market. Cryptocurrency markets are often very event-driven, and as we get closer to the next halving, Bitcoin's price will receive a boost from those anticipating the forthcoming reduction in new supply, said Garrick Heilman, head researcher at Blockchain and co-founder of Mosaic. In the months leading up to the last two halving events, we saw Bitcoin's price steadily trend upward and then power higher following the reward halving. There are more factors in play, however, now. Thorsten Koppel, professor of economics at Queen's University in Canada, said, "It appears to us and cryptocurrency should economically do the opposite of what Bitcoin is doing. The value of Bitcoin is partly driven by its potential as a payment tool and before the fees rose, along with the price, there were people using Bitcoin for international transfers. This has become more expensive to do now, but the price is still being supported. The increase in fees over the last couple of years, along with the rise in Bitcoin price, is a direct result of more people using the Bitcoin network. In December, there were roughly 400,000 transactions per day, though this has now fallen back to around 200,000 transactions per day, and fees are back down with it. As Bitcoin reward for mining new blocks on the blockchain falls, miners will increasingly rely on fees, which they get as an incentive to confirm Bitcoin transactions. Miners use the miner fees attached to the transaction to decide which ones to confirm, choosing the biggest ones first. Eventually, once all the 21 million possible Bitcoins are mined, miners will rely entirely on the fees for their income. Those first affected by a Bitcoin halving are, of course, the miners, with new Bitcoin coming at the expense of computing processing time and electricity. In recent years, the cost of mining has risen significantly, although both big Bitcoin mining consortiums and small miners are still able to make money, despite some claiming Bitcoin mining globally is now using more electricity than the whole of Ireland. I call bullcrap on that. But for miners, a halving means a big dip in revenue. Ahead of the second halving in 2016, the price of Bitcoin at the same time meant one block mined resulted in a new Bitcoin being around $16,000. That would have fallen to $8,000 directly after the halving. However, it's possible for the network to balance itself. As mining difficulty increases, fewer miners will be able to continue. If the potential rewards for mining are lower because of the halving, that may discourage many people from mining Bitcoin, according to Goodman. But the beauty of the Bitcoin protocol means that if the hashing power leaves the network, then the difficulty of mining new blocks will automatically be reduced. So less hashing power and less electricity will be required to mine each new Bitcoin. But what he does not state here, guys, is that the more mining that happens to Bitcoin and the more miners we have, the more stable the network. The less miners we have, the less stable. Heidelman added, I do not anticipate a significant change in the total mining hash rate due to the halving, at least not in the short-term run. Miners have historically shown a willingness to maintain or increase computing power through halving events because they expect future Bitcoin price to increase to offset the reduced block reward. Meanwhile, if the price of Bitcoin rises enough or it pushes higher by the miners who now need to be better compensated by fewer coins per block, there will be as many miners as before. And guys, that is a big thing. A lot of people claimed that, miners are what, or are who, I shouldn't say are what, miners are the people who are demanding the price of Bitcoin be set. And, there are huge mining pools. John McAfee actually just sold his big mining consortium that he had. So, miners, they make a lot of money, guys. Miners make a lot of money mining Bitcoin, or any cryptocurrency for that matter. But Bitcoin being the big dog, the one that's worth the most, and while granted, like computing power and the rig that you require and the graphics card, all eventually they cost you a lot of money initially. Those are non-recurring expenses. The recurring expense that you have to pay for is your electricity bill, which, if you're just a single miner, I'm not too sure how much Bitcoin you actually get to mine in a month or a year as being a single miner. I've never mined Bitcoin before, so I don't really know. But I do know that miners do make a lot of money mining Bitcoin. Drop me a comment down in the comment section, guys. If you are a miner and you are mining Bitcoin, let me know how much you're making a month or a year. I am legitimately interested. If it is enough, I would like to actually pick up a mining rig of my own, and see where it can take me. Let me know what you think, guys. We're going to move on to our technical analysis here. Stay tuned. And here we are, guys, on the Bitcoin versus US dollar day scale using the Bitfinex exchange information. And we're going to zoom in right away because, you know what? We planted a fat green flag, or a fat green candle yesterday, or actually today, an engulfing green candle, no less, that has swallowed up the last 3 days worth of red candle. That's a great sign, guys. That is a bullish sign, in fact. But we're not out of the woods yet. This could be what is referred to as a dead cat bounce. And for those of you who don't know what that term entails, if you were, say, to drop a dead cat off of a building and it hits the ground, even a dead cat will bounce. And that's exactly what they're stating here. Is that, sometimes even a dead cat bounces. Like if we go back here to the early part of January, we can see where Bitcoin stopped and bounced up just a little bit and then plummeted. That right here, let me grab my drawing tool. These green candles right here were a dead cat bounce, meaning that it was no real gains made because everything was just drained away as the price continued to plummet. I want to go ahead and remove those drawing tools. Okay, so what can we see from here, guys? Well, let's grab our trusty trend line, and we're going to drag it from the bottom like we always do. And right here, we've got our trend line. like we've been drawing lately, like so. And we've got the one that goes directly underneath, guys. This one here. It goes directly underneath, taking into consideration all this price action. Actually, I want to drop it down a little bit just to keep it fairly even, like right around there. That looks about right. And we're going to take our trend line again and start here, draw back, up this way. Actually, we'll just take it down through here. And top like so. And there we go. There's our triangle still. And actually what we can do, guys, is I want to bring this one up like so to give us a better bottom on this triangle. So we get the touch there, bring this end up like so. Yeah. So that's better. That paints a better picture of what we're trying to do here. Okay, so we've got this trend line here, this diagonal trend line. That is what Bitcoin potentially bounced off of. Let's have a look at our volume and see what's going on there. See if we can figure out if we're going to continue up or if our trade volume has started to dwindle. And from the looks of it, guys, we've got that big green spike, but yeah, our volume has steadily been declining, like so. You can see just the downward trend of it. If you follow the orange line, that's even a better indicator. So what we can see here is that we're on a rise again. Now, what will happen? That is the question. That is the question. Right now, guys, I want to state right now, before we even get into any sort of, money talk or anything like that, or trade talk, this is not financial advice. This is not as to be taken as financial advice. This is not trade advice. This is for educational and entertainment purposes only. As I try to educate myself in this space, hopefully I'm able to pass on a little bit of that knowledge to you, the listener, for free. With that being said, let's get right back into this. This area, guys, is a no trade zone. At least not a long-term trade zone. What you could consider doing is shorting right now. Is shorting the market. And what a short is you are betting against Bitcoin rising. In fact, you're hoping that the price dumps. And what a short is, guys, is you see how this price is up right now? You would buy in to the market right now at $7,465.50, and you would immediately sell your Bitcoin. You'd borrow it off of a broker and sell it immediately in hopes that this price, the $7,465, will drop. And then when it does, you take that money, how much ever you borrowed from your broker, and you buy back exact the amount of Bitcoin that you borrowed. You buy that back immediately. And since the price is cheaper, you'll have money left over. You keep that money. You give the broker back what you borrowed in Bitcoin, and you keep the remainder. That is what is called a short. And I'll show you exactly what I mean here, guys. I'll pull up a short position tool and show you what I mean. Say we get in right here. This right here would be our stop loss. The red, we would want to set that very tight, guys, because unlike a long position, a short position, you can owe a lot of money if you don't keep an eye on it. If this price were to spike and say Bitcoin shoots, up to $10,000, let's just make it an easy 10 grand. From here, you would owe that broker 33.78% more money because you held and you didn't sell and the price went up. So that's the meaning of a stop loss here, guys. You would definitely want to put a stop loss in nice and tight. I would say like 5%. That's just me though, because I hate losing money. And then from here, this is where you would sell, and then you would wait for the price to drop, and then you would buy back in, and get whatever, like your 10%, your 15%, yada yada yada, whatever you're shooting for, like wherever your target is. Currently, but yeah, as for long positions, guys, I would not be going long here. In fact, if it's my opinion, I wouldn't be trading Bitcoin, period, just because, I don't trust Bitcoin. It doesn't operate like a normal asset should. It is completely up to what miners and whales want to do with it. That's just my professional opinion. And it's not even professional. My amateur opinion, I should say. So it's just something to keep an eye on, guys. Yeah, definitely have an idea. If you do decide to trade Bitcoin, definitely have a plan in place. Because, I don't want you to lose tons of money. In fact, I want you to make tons of money, guys. That is the entire idea behind this channel, is to help educate you in the ideas of cryptocurrency and, give you the fundamentals and the technical tools to make solid decisions when it comes to your financial, future and cryptocurrency. So, with that being said, guys, that's going to do it for today's video. If you're still with me after all this time, hit that subscribe button, as I try to post a video every single day, Monday through Friday. And if you learned anything, hit that like button, share it with a friend. As always, guys, thanks for watching, and I'll see you in the next one. Peace.